Okay, so hello everyone. Welcome to Anuj Jindal. Welcome to RBI 247 session. Tell me if everything is fine with the audio and the video so that we can quickly start with the session. Till then, good evening everyone. Good evening Afsana. Good evening Shreya. Good evening Kuldeep. Good evening Anu. Good evening Abhishek. Good evening Lavanya. Good evening Rahul. Good evening Artistic. Good evening Sushma. Good evening Mayank. Okay, great. I think everything is fine, everything is clear. चलो start करते हैं. So after a long weekend, we have this session of RBI 247. I hope आप सबने revision करी होगी. I hope you all have done good revision of finance current affairs. So let's just start and begin with first revision questions. Okay, I hope you all are good and all are ready for the revision questions, right? Okay. Good evening, Kaushik. Okay, we are starting with the revision questions first, then we will move on with the topics of today's session. Okay, good everyone. So the first question is under the RBI's co-lending arrangement, under the RBI's co-lending arrangement direction 2025, the originating lender may provide a default loss guarantee. What is the maximum limit prescribed for such guarantee? Okay. Okay. Good everyone, great job. So C is the right answer. They have to maintain maximum of 5% of the loan amount as a default loss guarantee. They can do so. They can maintain a default loss guarantee of 5% if they want. Okay, question number 2. As per the CLA directions, again co-lending arrangement, how much each lender maintain accounts for loans given under the co-lending? Okay. What is the arrangement of the account between a co-lending arrangement? Whenever we are discussing between the bank and the NBFC, how they are going to deal with the accounts? See, the escrow account would be jointly. Okay, there is one problem with the question. I would take it this into consideration. दो चीजें हैं यहाँ पर. देखिए escrow account तो वो jointly जो held करेंगे वो करेंगे ही करेंगे. But along with that, they will also have their own separate account for each lender. So there are 2 points that are correct here. Okay, my fault here. I'll take this. But you are also right. But this is also correct. B is also correct. Okay. ठीक है. एक एस्क्रो अकाउंट होगा उनका जॉइंट, फिर वो आगे अपने अपने सेपरेट अकाउंट में उसे डिस्ट्रीब्यूट कर लेंगे. सो दिस इज मोर क्लैरिफाइड आंसर फॉर दिस क्वेश्चन. ग्रेट. ओके, क्वेश्चन नंबर 3. RBI CLA डायरेक्शन 2025 डू नॉट अप्लाई टू विच ऑफ द फॉलोइंग अरेंजमेंट? कौन से इस तरह के अरेंजमेंट है जिस पर ये डायरेक्शंस अप्लाई नहीं होती? Yes, D is the right answer. Multiple banking, consortium, and syndication loans. They are not a part of this co-lending arrangement. Good, everyone. Then we have question number 4. As per the eligibility criteria for a small finance bank to convert into a universal bank, what is the prescribed maximum limit for the gross NPA and the net NPA in the last 2 financial year? What is the right answer for the 4th question? Okay, I've got 2 answers. Yes. Good everyone. A is the right answer. Gross NPA कितना होना चाहिए? Equal to and less than 3% and net NPA is 1% or less than 1%. Good. Question number 5. Recently, AU Small Finance Bank became the first small finance bank to receive RBI's in principle approval to convert into a universal bank. Which of the following correctly highlights a key difference between a small finance bank and a universal bank? So what is the right answer in this? Yes, C is the right answer. Small finance bank primarily target the underserved and low income customers, while universal banks serve all customer segment with a wider range of services. Okay, question number 6. Recently, RBI released the report report on a report of the committee to develop a framework for responsible and ethical enablement of artificial intelligence free AI in the financial sector. The report was prepared under the chairmanship of dash. Right. B is the right answer. Good, everyone. Dr. Pushpak Bhattacharya is the right answer, and he was we can say, the chairperson of the committee. Question number 7. The Free AI Committee developed a set of guiding principles called DASH. These are accompanied by how many actionable recommendations? Great. D is the right answer. 7 sutras were there, and among them we have 26 actionable recommendations. Last question. The Free AI Committee structured its approach around 6 strategic pillars. Which of the following is not one of those 6 pillars? Which one of them is not part of 6 pillars? Okay, innovation was there, risk mitigation was there, infrastructure is also a part of that, and governance is also. Financial inclusion is not a part of those 6 pillars. So E is the correct answer in this case. E is the correct answer in this case. Okay, great. Now we are starting with the today's session topic. So we have 3 topics in total. All these 3 topics are related to your RBI's notification or circulars. Okay, so the first one is international trade settlement in INR. Then we have a report to review the liquidity management framework. We are going to have a discussion on the same. Then we have CTS. Okay, the continuous clearing and settlement under the CTS. So what is the change that they have made? We are going to understand that. These 3 are very simple. However, they are very important for your exam point of view. So let's just begin. So the first one says international trade settlement in Indian rupees. So what happens that AD1 category bank, these are scheduled commercial banks that are allowed by the RBI to deal with forex transactions. Okay. Now, whenever these bank open a SRVA account, open a SRVA account for any kind of importer, or we can say in India, or importer from India, or a foreign bank. So for that account, for opening such account, they need to take approval from the RBI. Without RBI approval, they cannot allow these people to open a SRVA account. Okay, but now this requirement have been removed. They have said that now AD1 category bank will not be required to take a prior approval from the RBI in order to open SRVA account, that is special rupee vostro account. Now what is this special rupee vostro account? Now as I told you that this SRVA account is an account that is opened by a foreign bank. This is opened by a foreign bank or Indian importer, right? Or Indian importer. Right? Now, this bank is denominated with INR. That means the settlement that is to be done in the trade will be done in the INR only. Okay, so here we are going to promote the INR, and we are reducing the dependency on the foreign currencies like dollars. So let's just have a look from the PPT as well. So they are saying that RBI has allowed the AD1 category bank to open SRVA of foreign banks without a RBI approval. This direction has been issued under section 10 and 11 of the Foreign Exchange Management Act 1999, and this is effective immediately. Okay, and this was earlier required, that is RBI approval was required. What you have to remember in this, that now no approval is required from the RBI in order to open a SRV account. This is the thing that you have to remember. And what do you mean by the SRV account? This is also important. Okay, so what is the agenda, why they have done so? So that the AD1 category banks take faster actions, and the procedural process that is there in order to open the account, that can be reduced and delays can be reduced. This will also promote ease of doing business for the banks as well, and for the importers as well, and for the foreign banks as well. They are dealing with Indian exporters, right? And we are also promoting our INR and reducing the dependency on the foreign currency like dollars. Okay, I hope this is clear. This was the first news. Let's just focus on the second news. This is a report. This is a report that is being issued by an internal working group. Okay, who was the chairman of this internal working group? Poonam Gupta. You have to remember this name. Okay, you have to remember this name. Poonam Gupta was the chairman of this internal working group. RBI told Poonam Gupta, who was the chairperson of this group, they asked them to review the liquidity management framework of RBI. See whether we need to change some of the things of the framework or not, and recommend us that what should be done. What should be the things that need to be revised, that needs to be changed as per the current economic conditions. Okay, now this group have released a report. They have released the report of recommendations that what should RBI do. Okay, now this is in the hand of the RBI whether would they agree with the recommendations or not, but this is the report, or this is the recommendation that has been given by the group. So we have to remember the recommendations. We have to remember what changes they have proposed to the RBI. Okay, so let's just read some few things about the internal working group. They said recently internal working group was constituted under the chairmanship of Poonam Gupta. They reviewed the existing liquidity management framework. We all know what do we mean by liquidity management framework of RBI. So basically this LMF allows the RBI to manage the liquidity of the Indian banking system. It has a set of tools through which they can manage the liquidity of the banking system. They can provide the funds to the banks in case of emergency or on a regular basis, or they can simply observe the excess liquidity that is there in the Indian banking system in order to control the inflation of the economy, right? I hope you have that overall concept of LMF in your mind, right? Now, which has been seen operation since February 2020. Now, what do they mean by this? They are saying that we have reviewed this LMF framework since February 2020. Now, it has been 5 years. It has been 5 years that we haven't reviewed this framework. We need to revise things as per the current economic condition. We need to see that whether current economic conditions and this framework are aligning with each other or not. These are the concerns of this group. Now, this group has submitted a report incorporating the recommendation that is being made by the group. Now, who are the members of the group? So, the chairmanship again is from the Dr. Poonam Gupta. Who all other are the members? Then we have Shri Radhashyam Ratho, Shri Ajay Kumar, Dr. Rajiv Ranjan, Shri R. Lakshmi Kant Rao, Shri Indranil Bhattacharya, Shri G. Seshasai. Okay, I hope the members' name are clear to you. You just have to remember the name of the members. Okay. Okay. So they are saying that it has been improved continuously. The LMF system and the framework has been continuously improved from last 20 years. We last updated it on February 2020, and now it has been over 5 years that we haven't reviewed our framework. There are a lot of changes that has happened over the period of time in our economy. Like there was COVID-19, Ukraine war was there, global monetary tightening was there around the corner in COVID-19, and then they relaxed all the monetary tightening after this COVID-19 in order to boost the demand of the economy. Again, rise in digital payments are there. Payment system are working 24/7, and just in time tool are being used currently. That means center are paying, or we can say providing funds to state when, as and when required. As and when required. What used to happen, that center used to give all the money to state well in advance. So they were giving big advances to state without even asking that what exactly they need funds for, right? But now the center is giving funds to the state whenever they are proposing or whenever they are asking them. Okay, so this is just in time thing that was we can say introduced. Also, there was a lot of capital flows and highly volatile volatility was there in the financial market and in the Indian banking system as well. So there's a lot of things that were happened, and we need to check these economic conditions and our LMF too. Okay, so what are the recommendations? They have made some recommendations. So first recommendation is regarding the WACR. What is WACR? Weighted average call rate. Okay, this is a call rate. This is a call rate which is being used in overnight basis, where banks are borrowing or lending money on overnight basis with each other. Okay, now this WACR is operating without any collateral. They are saying that this WACR is not being used by many of the banks nowadays. Many of the banks have shifted towards a more, we can say, safest market, wherein the things are collateralized, where the funds and the borrowings and the lendings are being collateralized. Okay, so they are shifting to that market. Now the participation in the WACR is very less. So do we need to keep it, or we need to remove such kind of system from our liquidity management framework? So this was the issue. So what they recommended? They recommended yes, we need to continue with the WACR as it is a main operating target. What else? What are the benefits of having WACR in our liquidity management framework? They said that it is being controlled and monitored by the RBI. So it is completely safe. There is no harm in keeping WACR. It is there in the market, in the liquidity management tool, as a option for the banks. Okay, in case they are not getting funds from anywhere, they can get it from there. Also, it is controlled and monitored by the RBI, and we can see that what is the RBI stance through this WACR, because WACR is without any collateral. So we get to know what is the lending rate. What is the lending rate, or we can say what is the credit risk, actual credit risk that is there without any collateral. So this kind of thing is available through this WACR. That is the reason they recommended that yes, we can keep the WACR in the management, in the liquidity management tools. So this shows the true credit risk that is there without the collateral. What else? A stable WACR helps other rates as well. Okay, they are saying that many of the things are related with the WACR. They help us see that what are the changes that are happening across various kind of rates, like loans are there, deposits are there, T-bills are there, commercial paper, certificate of deposit. They all we can say rates are interlinked somehow. So that is the reason they are saying that we will continue to keep these WACR in our liquidity management framework. Here comes the second recommendation. Then here comes the corridor system. We all know that under the liquidity management framework, under the LMF, there is one core liquidity management tool, which is LAF, liquidity adjustment facility, wherein there are three things. There is a repo rate, and then there is MSF, and then there is SDF. Right? This is the corridor. Okay. Now the SDF and the MSF depends upon what is the repo rate. This is more and less than the repo rate by 0.25. Okay. Now this corridor gives us the width of the rate. Now the more wider it is, the more wider this corridor is, the more fluctuation would be there. The more fluctuation would be there in the borrowing or lending market, right? If this corridor is shorter, there is less, we can say, fluctuation, as it is more, we can say, stable in the shorter period of time. So this committee asked the question, do we need to widen this corridor or not? Should we keep a difference between the MSF and repo rate and difference between the SDF and repo rate by 0.5? Should we keep it? Should we widen the corridor? So the answer is we should continue with the current systemic corridor, that is with the difference of 25 basis point away from the repo rate. They said that we need to keep it the same because this is working well for the Indian banking system. So they said that there is no need to widen or narrow up the corridor system that we currently have. Okay, so this was the second recommendations. आगे देखते हैं. Then we have operational toolkit of the LMF. Okay, here was the LAF, that was the core liquidity system of the LMF. Then here we are with the flexible repo rate and reverse repo rate, wherein the rate are being auctioned by the participant. Now there is one kind of system which is 14-day VRR and VRRR. They said that this 14-day VRR is very difficult for the participants like banks to borrow from or to deposit their money in this. Why? Because it is very hard for the banks to predict their liquidity for next 14 days. So they asked the question in the committee, in the group, they asked whether we need to reduce the timeline of such VRR or not. Okay, so what they said, RBI mainly uses 14-day VRR or VRRR auction to manage the short-term liquidity. In order to manage the short-term liquidity, they use this kind of tool, 14-day VRR or VRRR. But banks don't like this 14-day VRR tool because it is very difficult for them to predict their liquidity for next 2 weeks. So issue was, should we continue with the 14-day VRR or VRRR? So the answer is stop using 14-day VRR or VRRR. They are saying this is not an effective tool, but with this they do not mean that we are going to remove it. Let me clarify this point. With this, they are saying that we are not going to use this 14-day VRR as a main tool. We are not eliminating it. We are not deleting it from the liquidity management framework, but we are not going to treat it as one of the main tool. We are going to replace it as a 7-day VRR option as a main operations for banks and the participant. Okay. So the RBI may still use the overnight 14-day operations, but the main operations from now onward will be 7-day VRR. Now again, these are just a recommendation. They are yet to be approved by the RBI. So you have to take these things into your mind. Okay, you have to consider this fact that these are just a recommendation. They are not yet approved by the RBI. Okay, so the RBI should give banks at least one day advance notice about these operations. They are recommending that RBI should state these kind of regulation wherein whenever a 7-day VRR is being conducted by the RBI should give a 1-day advance notice to the banks and the participants. In case there is some kind of urgency, there is some kind of urgent cases, in that case they can give the announcement on the same day and conduct the VRR on the same day. Okay, so these are the recommendations that are being made by the group in this case of VRR. अभी तक कोई डाउट तो नहीं है, कोई क्लैरिटी है आपको, कोई डाउट तो नहीं है? मुझे फटाफट से क्लियर लिखेंगे सो दैट आई कैन कंटिन्यू विद द नेक्स्ट रिकमेंडेशन. ओके, क्लियर है? ठीक है. ओके, इसी ऑपरेशनल टूल में, within this operational toolkit of LMF, they have given one more, we can say, recommendation. They said some things about the long term liquidity management. VRR for 14 days or 7 days is for a short term, we can say, liquidity management tool. We also have 36 days, 28 days or more days VRR as well. So for that we are going to consider them as long-term liquidity management tool. So the committee asked, so the group asked that do we need to bring some changes in these long-term liquidity management tool? So the answer was no. We do not need to make any changes to the OMO that is currently there. We do not need to change anything regarding the VRR and VRRR in the long term. And then we have forex swap auction as well. We do not need to change anything under these specific tools. They are running well and they are doing great in the current economic conditions. Okay, so they are enough. No new tool is required in this. Now here comes the recommendation for the standalone primary dealers. Now who are standalone primary dealers? Standalone primary dealers are the one, these are non-financial institutions that used to participate in buying and selling of government securities. In buying or selling of government securities, right? Now they are there just to provide liquidity in the market. They also do not maintain any kind of CRR or SLR, right? In case they want to buy anything, in case they want any kind of liquidity, right? For liquidity, they used to go for call money market. They used to go for call money market, CMM. Abhinav, ask your question. Why are you asking me? Just write your question in the comment box. I'll try to read between the class and I'll answer you. And do not create the spam of such comments in the comment section. Okay? Okay. SPTs borrow money, right? So they borrow money from the call money market in case they need any kind of liquidity, right? Now, what happens that they use this tool as 75% of their capacity. So how many SBTs are there? How much the capacity of the CMM? They are using 75% of it. Okay. So this committee asks that do we need more options? Do we need more options of liquidity for SPDs? Should we open more doors for SPDs to access funds? So the answer is yes. They said yes, we can provide more options to the SPD in order to manage the liquidity. Okay, they said they can participate in all repo operations. They can participate in all repo operations. Like there is fixed repo and reverse repo. Like there is variable VRR, 14 day, 28 days, 36 day and more days, right? They can take part in VRR or VRRR as well. They can also participate in regular overnight funds requirement, right? Okay, so they said that they can take part in all such liquidity tools, but they will not be allowed in using MSF, marginal standing facility. Now MSF is there for only scheduled commercial banks. Now scheduled commercial banks have that privilege to access the overnight emergency funds from the RBI because they have to maintain CRR, they have to maintain SLR, right? They have to manage these things. In order to manage these things, they need this emergency fund. So only scheduled commercial banks should have that privilege to access the MSF, and SPDs will not be allowed to take part in the MSF. Okay, because after market hours, or after, we can say, market hours, whenever market ends, or we can say shuts down, there is no need for SPDs to participate, right, to borrow money, right? But in case of scheduled commercial bank, they need, or they have to manage the liquidity for next working day as well, so they will be allowed under the MSF, but SPDs will not be allowed under the MSF except all others, we can say, liquidity tools. So they have provided you the reason as well. So SPD have no reason, no reserve requirements, and no certain payment needs after the market hours. So that is the reason they will not be allowed under the MSF. Then we have averaging of reserve requirement. Okay, averaging of reserve requirement. Abhinav, I'll resolve your doubt. Just let me complete this session today. So I'll cater your doubt. Okay. Okay. So what was I discussing? Averaging of reserve requirement. Now what happens that banks need to maintain CRR, right? Suppose they need to maintain a CRR of 3%, right? Now RBI says that whatever CRR is there, suppose there was 100 crore of deposits, and as per that deposit they have to maintain 3 crore. They have to maintain 3 crore of CRR with them. Now they are saying averaging, the word averaging. I am going to explain you the concept of averaging. They are saying on a daily basis, the banks need to maintain CRR of 90%. होता क्या है, CRR 100% मेंटेन करना होता है हर बैंक को, बट दे आर सेइंग कि रोज डेली बेसिस पे बैंक्स कितना मेंटेन कर सकते हैं, CRR 90% मेंटेन कर सकते हैं, ठीक है, ऑन एन एवरेज कितना होना चाहिए, 100 होना चाहिए या फिर उससे ज्यादा होना चाहिए. अब आप कहेंगे मैम हाउ कैन वी अंडरस्टैंड दैट on an average basis, how we are going to calculate the CRR? Suppose we are going to take an example. Suppose for the first day they have maintained a CRR of 2.5 crore, and then on the second day they maintain a CRR of say 3 crore, and on the next day they maintain a CRR of 4 crore, right? So if we take an average of these 3 days, there would be of CRR of 3.16 crore. So this is more than what is required. This is more than, on an average basis, this is more than 100% of the CRR that is to be maintained by the bank. So they are saying on this average basis, they have to maintain 100%. But on daily basis, they can maintain 90%. So they are saying that do we need to revise this on daily basis? Can they maintain 80% of the CRR on a daily basis? Can we do such thing? Because that will free up more and more capital for the banks. They can use such funds in lending more money in the market, right? So they are saying, so their question is, do we need to reduce it? So they are saying no. Keep the rule unchanged. They have to maintain minimum of 90% of their CRR on a daily basis. It cannot be reduced to the 80%. Okay, I hope the recommendation is clear to you. So they have kept this also unchanged. Okay, so because the system is already working fine, we do not need any kind of volatility. The payment system are working 24/7. There could be an instant withdrawal, there could be an instant deposit in the banks, and the bank have to be ready for that. So for that, we do not want to welcome any kind of surprises or risk in the Indian banking system when the things are already working fine for us. Okay, so that is the main reason they are saying that we are going to keep it at 90%, and banks are currently already keeping 95% of more of their CRR on a daily basis, which is again good for the Indian banks. So we do not need to change this thing. Okay, chalo. Here we are with the third topic, which is continuous clearing and settlement under the CTS, which is check truncation system. Okay, check truncation system क्या होता है? CTS. It is an electronic system of settling and clearing checks, which is being given by RBI. Now what happens that instead of moving the checks physically, they just scan the checks and settle it. Now they are saying that generally what happens, that the checks are being, we can say, settled on batch, on a batch basis, on a fixed batches, right? But now they are saying that we are not going to settle these checks on a batches, but we are going to have a continuous clearing of these checks for immediate fund transfer. Immediate fund transfer. So this is what they have changed. Now this is a very drastic change they have made in the CTS system. Now you have to remember this change, that from batch processing they have shifted to continuous clearing and settlement on realization under the CTS. Now this thing is very important. Remember the basic concept of CTS, and then remember that from batch they have moved to continuous clearing and settlement of the CTS, and now they are going to implement this change in two phases. The first phase will be from we can say 4th October 2025, and the second phase will be 3rd January 2026. Okay, so this change has been made under section 18 and 10 of the Payment and Settlement System Act 2007. Now the new system, under the new system, the checks can be sent by banks anytime between the 10 a.m. and 4 p.m. They are immediately scanned and forwarded for the clearing. So they are saying कि between 10 a.m. to 4 p.m. the banks are going to send the checks for clearing. The banks on which check is drawn must continuously confirm the checks. ठीक है? मान लीजिए I am a person, I have deposited a check, right, with a bank, right? Now this is a bank that has received, we can say, received my check, but from which bank that I have received it, from that it must be approved. From that it must be approved within a particular time limit. Okay, we are going to understand this in a next slide. ये किसके बारे में है? We are going to understand this in a next slide, क्योंकि इसके लिए एक particular timeline है, तो हम वो next slide में ही सीखे, तो that would be much more better. ठीक है, phase 1 में देखते हैं. The bank must confirm by 7 p.m. If no response, the check is automatically treated as approved. वो कह रहे हैं जिस बैंक से पैसे कटने चाहिए, जिस बैंक से the money must be, we can say, deducted, that bank must approve the check. In case they do not approve it on time, we are going to treat it as approved, because we are treating bank silence as a approval. Next, from the phase 2, for that approval, in the first phase they will have a time by 7 p.m. Okay, for the first phase they will have a time by 7 p.m. But in the second phase they will have only 3 hours to confirm. For the same. Again, if in case they are not confirming the same transaction, the check will be automatically treated as approved. For every hour from 11 to 7 p.m. 11 बजे से सुबह 11 बजे से शाम के 7 बजे तक, the settlement will be done. The checks will be settled on a continuous basis. Okay, continuous basis पे checks को settle किया जाएगा for approved checks only. And whatever checks that are being bounced, they are literally being dishonored for the request, they will not be settled under the given time period of 11 a.m. to 7 p.m. Okay, then we have presenting banks must release money to the customer within 1 hour of the successful bank. Now the presenting bank is the one bank that have received the money. They have received the money in their banking system. Once they have got the money, they have to transfer the funds to the customer's account within 1 hour. Okay, so here we are with the questions. I hope आपको समझ में आ गया होगा. Let's just begin with our questions. So it says, recently the internal working group was constituted to review the existing liquidity management framework which has been in the operation since February 2020. So what they are asking, okay, who was the chairman of this working group? What is the right answer? Right. Dr. Poonam Gupta is the chairman of this working group. Good, everyone? Okay. Question number 2. Question number 2. Recently, the RBI has announced that the check truncation system will shift from current batch processing method to continuous clearing and settlement on realization. This will be implemented in 2 phases. First will be from dash and second will be from dash. Fill in the blank with the correct options. Right. A is the right answer. That is, phase 1 is going to start from October 4, 2025 and January 3rd, 2026, phase 2. Okay. In August 2025, the Reserve Bank of India, that is RBI, announced the authorized dealer category 1 banks can now open SRV account for overseas correspondent banks without the RBI approval. Which of the following is not true about the SRVA after the RBI August 2025 notification? Only 4 students have answered for this. Right. C is the right answer. That is, sorry, A is the right answer. That they are denominated in foreign currency. Yes. C is the right answer. They allow settlement of exports and imports in Indian rupees. So C is the right answer. C is the right answer. This is incorrect. The notification applies with the immediate effect. So they are not asking about the notification. So yes, C is the right answer. C is the right answer. Okay. So I hope the session was fruitful. Okay. So keep on revising for the finance current affairs. Who was asking me for what? Okay, what is the meaning of gross value added? So basically, this is a very basic thing. Let's just understand this with the help of an example. Suppose there is a bakery. They got some raw material from there, we can say, like some kind of flowers is there, eggs are there in order to bake a cake. So they spend 100 rupees for that. Now, in order to bake or in order to make that cake, they added how much? 50 rupees. So this 50 rupees is a gross value added that has been contributed by the bakery. That has been contributed by the bakery. So this is GVA for you. Okay, I hope you have understood. Okay, so we are going to meet again on we can say Thursday, and we will take another, we can say, topics for the same. I hope you have liked the session. Keep on revising your finance current affairs. Okay, so goodbye everyone. Thank you everyone. Bye bye.